Carl and Erin Swenlin. For those of you joining us for the first time today, welcome to the show. And for our regulars, of course, welcome back. All right, let's go ahead and get started today. Dad, how you doing?
Pretty good.
Pretty good. Market's looking pretty good today, that's for sure.
Yeah, it's edging up.
Yeah, absolutely. Well, we've got lots to cover. We're going to look at the broad market indexes. I have a price relative chart with the S&P that I like to show during the show. We will do a weekly review. I'm going to do the scoreboard indexes, the S&P 500, 100, Nasdaq 100, and Dow Industrials. We will look at, of course, our DecisionPoint indicators and what they are telling us. And then Carl is going to go over the big four: dollar, gold, oil, and bonds, both the daily and weekly charts. And for our bonus, today we're going to concentrate on the Nasdaq 100 and S&P 600 indicator sets that we offer at DecisionPoint in our chart lists. And we want to just share some of those and the kind of information we're getting off of them right now. So let's start off with the scoreboard. What is going on? Well, as you can see this week, we ended up with 4 new PMO buy signals on the daily charts for all of these large cap indexes. We've had a lot of whipsaw with the PMO on all of these indexes. Well, I think except for the Dow, because the Dow had the PMO had a lot of distance to travel to its signal line. But I know I got some whipsaw on the S&P 500 and the Nasdaq 100. But at this point, they're all on buy signals. They look like those signals will stay intact, but we'll show you those charts shortly. As far as the sectors go, the DecisionPoint sector scoreboard, the intermediate term trend model is on buy signals all the way down. And that means that the 20-day EMA is above the 50-day EMA on all of the sectors. We did get a new buy signal for the long-term trend model. These are the 50 and 200-day crossovers. And materials, we got a buy signal, so the 50 did just cross above the 200-day EMA. I will probably put an article together about that in Chart Watchers for this weekend, so keep a lookout for that. All right, but let's go look at some charts. That's always the best part, I have to say. And away we go. Here we are. Okay, let's start over here with my charts on the relative. So we're going to first look at the price relative of these various indexes in comparison to what's going on with the S&P 500. So these are relative ratio lines. So as you can see, we have the Dow has not been performing as well as the S&P. It's still pretty much in the same position it has been over the past week. We're not seeing much change in that. It's pretty much moving along sideways, but you can see that technology and the Nasdaq 100, of course, has been performing much better than the S&P 500. S&P 100 not quite as well, and it's not performing as well, continuing to not perform as well as the S&P 500. It's just trickling lower. As you can see, the S&P 400, S&P 600, we're starting to see them advance as far as their participation, their price relative to the S&P 500. So they're starting to perform better than they have been in comparison. So we like to see that. It tells us that the mid caps and small caps are participating in the current rally that we're seeing, and that's always a good thing. And it usually means that we might see some staying power on a rally if we're getting all of, if the small caps and the mid caps are also participating. All right, this is our broad market index chart. And one of the interesting things on it that we do add is the equal weight for the S&P 500. It's always interesting to see how it performs versus the cap-weighted index. And at this point, we could see that it was not performing quite as well. We got a flat tops on the equal weight, but we were seeing the larger caps clearly pushing the S&P 500 higher with these tops here. But now you're seeing the breakout and we're getting that participation. It looks very similar to what's going on with the S&P 500 right now. And Dad, if I recall, we usually see the equal weights participate better on the upside. And I suspect that's because we start seeing those lower cap stocks participating more? Would that be?
Well, the equal weight is basically showing you what the small or large cap stocks are doing, and it tends to perform well at the beginning of rally. It performed better than the S&P, and that's the same way with the S&P 400 and 600. The smaller cap stocks generally perform better at the beginning of rallies, and then they kind of taper off towards the end. They maybe get perform equally well or not as well.
I did want that to talk about that. I know one of these shows we will concentrate a little bit more on equal weight versus the cap weighted, because we do have a lot of charts with that, and you might find those quite interesting. So, all right, global markets. We've been watching, we've come out of our bear market, but we haven't seen the same from all of the other countries. And so we have been kind of keeping tabs on that with this particular chart. And you can see that Germany is now finally starting to break out of that declining trend that they've been in since the top in January. France, not quite so much. We still have some distance to go. UK is getting ready to challenge that declining tops trend line. Japan, not yet. Not yet. India, though, we added this one on the chart, and as you can see, it managed to get out of its. Wait a minute, that annotation does not look correct here. Let me fix that.
Mainly, they were in a bear market from the early 2018 top, and most of them hit bottom there at the end of 2018, rallying, but of course not as strongly as the U.S. market. Right.
China's doing all right, at least when you look at this chart, that's for sure. Okay, let's move along. All right, let's look at these large caps really quickly. I find some interesting patterns here. The Dow, like I said, it hasn't whipsawed, and we did finally get that PMO buy signal to come in this week. And, this pattern is a bullish pattern, and we got the breakout as we would have expected. And, typically, and one of the things you can do on measuring a possible upside target is you can take the distance between the first top and the first low, and that would be the distance you're looking at it moving higher. That's just a on the napkin sort of thing. But I know a lot of technicians who do that. That would, of course, put us above that all-time high. So the expectation right now is the market's performing quite well, and it does look like it's going to start challenging those very soon. All right, with the Dow's weekly chart, not much more to look at here. It's still on its buy signal, trying to get back into the rising trend we saw previously. We're going to look at the Nasdaq 100, and we got a nice breakout here from that short-term top today. And you can see we have had that whipsaw going on with the Nasdaq 100 since, mid-March. It's kind of been, we've had 3 signals, and this one does look like it might stick. We'll have to see. The problem, I would say, at this point is it is overbought. The PMO is definitely overbought. But look at the participation here in the volume on the OBV, really looking strong here for the Nasdaq 100. Again, not too surprising given the performance of the technology sector as of late. Looking at the weekly chart for the Nasdaq 100, we are starting to recapture and get back in to the rising trend we had started on this, the original bull market that we broke down from. You can see the PMO is still on a buy signal, so that's all good. And now let's look at the OEX very quickly. Rising wedge, PMO buy signal, overbought, but again, really great volume participation going on with this rally. It certainly does give you some confidence in the rally and its staying power. All right, PMO buy signal still on the weekly chart, and you can see we're now challenging the top we had back here in earlier 2018 for the OEX. And we looked at that daily chart. It's looking bullish. I would look for most of these indexes to start challenging their all-time highs. I don't know if it'll be this week, but I suspect we're going to get there. We have the bearish ascending wedge on the S&P 500 still, and we are tapping on the top of that formation. Again, when you look at the kind of participation, the volume that's coming in, this really, look at the OBV, nice breakout from that declining trend. The buy signal, it's really hard to imagine that we're going to get this bearish pattern to execute, at least not quite yet. Weekly on the S&P. Alrighty, PMO buy signal still intact. You can see here on that 2018 high, when I look at it on the weekly chart, we are getting that breakout there. So that's what we want to see, so we can start getting toward the all-time highs. All right, Carl and I just looked at this chart right before the show came in, and it looks like a pretty classic case of a buying exhaustion lining up. We're not, I don't know that we're going to get that pullback right away next week, but I would look for this rally to take a pause at a minimum and the next day or two going into the next week. One of the reasons we have these very climactic advanced decline reading here for the breadth and the volume is that's elevated. It's not as climactic as I probably would want to see here, but we also have elevated new highs. But this is what I'm really watching for, the penetration of that upper Bollinger Band on our inverted scale.
The new highs, but notice that they're fading versus the new highs that we had at the beginning of April. So
yeah,
the market was higher than that today, but price-wise, but that's not necessarily a critical issue, but
something to point out for sure.
But mainly, this VIX, it's really an excellent indicator when you have the VIX is hitting the top of the top Bollinger Band on this display. It didn't quite do it today, but it's close enough that it gets my attention. And when that happens, we've got a couple of days before probably we're going to have a top. And that doesn't mean a major top, but it definitely could mean a short-term top. And you can see how it's done that all this year.
Absolutely. And, a lot of times we can get out of these we can get out of overbought conditions just by moving sideways even, just consolidating, just pausing. But yeah, I'm looking for a little bit of a decline going into the week next week, maybe just to get some of the, just unwind some of the indicators and also the price trying to get overbought. So this one was interesting. Right now, you can see that both the STOB and the STOV are rising. When I looked at this earlier before we had the final numbers, we did have the top on the STOB and it was starting to head back down. In any case, that top right now is lower than the previous one. And we know, even though we haven't gotten a second top, we already know it's going to be higher. So we're looking at this as a divergence and, their attention flags. At this point, look, we had a very similar divergence right here. It ended up with a, before the decline, the bear market decline, the serious part of the bear market at the end of December when everybody was catching their breath. So, these can come up, but we really haven't, I don't know, Dad, I know we've been watching these charts and we really in the past have not seen divergences like this. And we're finally starting to see them. So we're still evaluating what they mean, I would say, at this point.
Okay.
Yeah. Yeah, okay. The intermediate term indicators, not much to say here except that they look great. So I will say that the one thing that we talked about is that we are looking in terms of the normal range for these particular indicators. We are overbought. So, they could support a little more upside, just we've seen higher, but not a lot. We should probably start watching these very closely for a possible turn to the downside. But right now, they still look pretty strong and are rising. All right, Dad, let's get you up. First one is going to be, let's just start over here. I already had it ready. Okay.
You need to give me the...
yeah, the wrong one. There's where I want to be.
Okay. The dollar is still edging higher. It's in a rising wedge. It's a very loose wedge, so it could take forever to resolve. PMO is positive. Let's take a look weekly.
Mm-hmm. Come on now. All right. Mm-hmm. It doesn't want to do anything for me here. That's odd. Okay, well, we'll come back out of that. Yeah, okay, real interesting, you know.
Okay, so now's the dollar looking at the long, a 2 to 3 year trading range, coming up on the top that we had in 2015, and then the major top in the middle and at the beginning of 2017. While the looseness of that wedge is allows us to go higher, I think we're going to run into resistance in the 26 to 2650, 2625, I should say, and up to 2650. So it's probably seeing the end of this up move.
All right, and we did get the PMO buy signal, but you can see it's been really twitchy. All right, gold weekly chart.
Okay.
A daily? I don't know if you had that.
Yeah, let's go with, we didn't get a daily, did we? That's what happened last week. It's okay. We'll go with the weekly chart. The PMO has been moving sideways for a couple of months, but it's topped now. As of this week, it topped. And you can see we've had a breakdown from that rising trend line. So I'm afraid we're going to be going down to test the rising trend line drawn from the August low, and that will be about 1250. We ought to find some, we can hope to find some support. But yeah, if we had the daily chart, we will see a developing head and shoulders.
Yeah, I can find you one.
Okay.
There we go. It might be annotated a little differently, but
yes, you got me the dollar chart.
Oh, and there we are.
All right, yeah, you can see it. Yeah, left shoulder, head, right shoulder, and there's the neckline. So I still, if that executes, I'm still looking at probably a decline down to that rising trend line off the August low.
Right.
I don't have to dwell on this any longer.
No. Okay. Let's go back to yours. There we are.
Okay, USO has broken upward out of the ascending wedge pattern, and that's very bullish when it goes the bullish way out of a bearish pattern.
Yes.
Let's take a look at the weekly.
All righty.
Same thing. We have a bearish pattern with a bullish breakout, and I would not be surprised to see it go all the way up there towards 16, which would be around $76 for crude.
Okay, that'd be nice.
Okay, we had a breakout from a flag, and then really strong up move, gapping up And to this week, it pulled back and actually gapped down on Wednesday. We closed the gap today, but I think that is probably heading lower.
Mm-hmm. Okay, yeah, the PMO certainly suggests.
Yeah, it's getting too close. The weekly gives us a little hope because we broke through the upper the resistance line, and today or this week we retested that line, closed slightly below it, but not enough to say it's a definite breakdown. So it's possible to go higher.
All righty. Okay, let's go back here now. All right, some bonus material for you. Let's look at some of these indicators, and you can find these in the chart lists for DecisionPoint. So just go to your account and you'll be able to find the chart list there. If you're an extra member or above, you can have it.
Right. You know, I developed these indicators long term. I'm not saying I was the first one to ever do this, that's for sure. But I noticed that people were not using indicators derived from the components of the index that they were using them with. For example, somebody might have the Dow chart up there, and they would be using an advanced decline line from the New York Stock Exchange. To me, it's not the worst thing that you could ever do, but it's just there are better ways. Better ways to do it by finding out what's really going on within that specific index. So here we have the Nasdaq.
I'm going to see if it's
100, and
I just want to see if we've got today's data we could put in there. There we go. No,
it's probably not. Well, no, it probably this is one that comes late. The stocks above their 250 and 20 EMAs, but this gives you an idea how well that this index is doing. There's still a little below, say, 2017 and 18, but they're really right up there. They're really in gear with what the price is doing. So notice that they're all reading around 80 or higher.
Mm-hmm.
Now let's take a look at one. We have the same one for the S&P 600s, your small caps. Notice how very depressed the above 200 EMA is, and then as well as the 50, depressed in terms of how well the Nasdaq 100 looks. So your small caps are, as we know from other indications, running behind.
Okay.
And the next one, we have the ITBM for Nasdaq 100, and it's up there. It looks a good deal like the S&P 500 indicators, same indicators.
Mm-hmm.
Notice the levels they are, and then let's look at the small cap chart to see comparison. See, they're all down touching the zero line.
Oh yeah.
So
they're not at all overbought, are they?
Right. So if you were concentrating, like trading the small cap index, these indicator sets, you should be using them rather than, if you're going to be trading the small cap, use the indicators that are available. And these are, what you call market indicators, which are based on advanced declines within that index. Let's try the last one I have up there. This is the advanced decline line. Just an item of note here. You notice there is a scale on the advanced decline line. You can ignore that. It all depends on, even if you had identical data with somebody else, it would depend on where you started keeping track of that index. It's just a cumulative of the advances and declines. and the actual reading is immaterial. You just want to see how it is relative to previous peaks and lows on the chart.
Right.
Anyway, that you notice that these advanced decline lines are making new highs within this time frame.
Mm-hmm. And yeah,
actually, you could say
yeah,
that there's a reverse divergence based upon the indicators making new highs, whereas price is still not exceeded the September, October tops. So the further apart these divergences get, the peaks, the less weight I put in them, but it's there.
Mm-hmm.
Let's take a look at the same chart for the small caps. Notice there has reached the same level as back in September. Actually August and September. It did that in February, and it's challenging those levels again, but that's the breadth. The volume line is still behind.
Yeah. Excellent. All right, so I know everybody, you loved these charts. I'll just show you really quickly how you can find them. So if you just go to your account and then you go down to chart packs and you manage those, the DecisionPoint ones are free. Like I said, you have to be an extra member above, just because for the simple fact, basic members only get one chart list. And obviously there are a ton of chart lists in these. So, but all you have to do is come here. Recommend the one that we've been looking at are the straight shots, I believe. And you can go right in to any of these indexes and find the charts that we were looking at plus some. So there are a lot that you can look at, and recommend you take advantage of the fact that they are free. The straight shots, so you can pick an index and move right on in, and then the trend and condition are based on our actual indicators that we have and what's going on in the broad markets here.
Well, the straight shots have a set of indicators for a specific index, whereas the other one,
trend and condition.
Yeah, trend and condition has a set of indicators for each index. You'll get a set. You'll go to an index and you'll see all the indicators for that particular index.
Mm-hmm. And then, of course, if you want to start with the indicators, you just get the market indicators chart pack. And of course, those are all in here. Here's all of them. And if you want to go at the indicator first and go to, say, the new highs, new lows, you can just go to that chart list, and it has the list of all of the indexes in there of those charts. So you can either start with the index or you can go back the other way. All right, well, I think we had a great show today. We didn't actually get too rushed at the end, which is always great. Thanks for being here, Dad.
Welcome.
And we want to thank all of you for being with us here today. Please remember to complete the survey as you exit. There's a link right below the video player. And I know Carl and I really like to get your feedback on what you like seeing and what you want to see more of. As a quick reminder, DecisionPoint airs Fridays at 4:30 p.m. Eastern Standard. Have a great weekend, everyone, and we'll see you back here next Friday. Happy trading.